Let's get talking about a couple of cues for the markets. We have Nimesh Chandan, who is the Chief Investment Officer at Bajaj Finserv Asset Management, who is joining in now. Nimesh, hi, welcome to the show. Thank you very much for taking the time out. If you could just start with your overall call for the markets, just about consolidating today. We had a large FII sell figure yesterday. What is your take? Is it more stock specific? Are we going to see consolidation in the frontline indices to continue?
Good morning and happy to be on your show. We are quite bullish. So while there is volatility expected in the near term based on certain headlines that come, certain numbers that come of the previous quarter, actually, fundamentally, India is actually positioned very well for this year. There are many positives that have come up in the last 4 months, which actually strengthen this up move and possibly can continue this bull market. We've seen fiscal policy being more demand-oriented, and you will start seeing that reflected in generally savings and consumption growth in the coming year. We've seen accommodative monetary policy with 2 rate cuts already come in and 2 more expected. So lower interest rates, better liquidity, better credit growth will start showing up, and it will impact BFSI positively. It will impact consumption positively. Even in the trade talks, if you see the worst case scenarios didn't turn up, and India actually benefited from some of these trade talks, and possibly we have another agreement to be signed with US also. And trade is a relative game. So if your neighbors are being taxed more and you are at a lower tax rate, then it's fine. So a lot of positives that have come up in the last few months. I think markets are reacting to that. Yes, some volatility based on international headlines as markets stabilize will come in, but very positive outlook for India, especially the large cap space and selectively in mid caps and small caps.
So what is your positioning right now when it comes to sectors, Nimesh? And based on your investment philosophy, what are some of the things that seem attractive to you beyond the financials and consumption names that you just spoke about? If you could get a little more specific.
I'll just give a perspective and try to slice and dice our portfolios in various categories of segments. Let's say if we've been accumulating mid cap and small cap in the last 2 months, and we've increased allocation there. We have increased companies with a combination of quality and growth as a factor because they give you upside as well as they are a bit defensive. On the third, if you cut by themes or sectors, we are positive on BFSI, consumption, and healthcare. Within BFSI, NBFCs will see immediately the benefit of lower costs, and we believe that rest of the year you will see good credit growth helping the banks. In terms of consumption, we are bullish from everything from groceries to real estate, and especially certain segments like alcohol beverages, real estate, and ancillary plays to real estate. We are quite positive on. And healthcare, we believe that after some clarity on this US tariff, valuations will get back to normal because there's a huge runway for growth for generics. Indian markets, in terms of pharma, diagnostic, hospitals are giving you a steady growth and the numbers are good. And CRAMS and CDMOs, I think this is one segment which will see a very good growth in the next 3 years.
All right. Hi, Nimesh. Good morning and good to see you. When, just to sort out a couple of details, earnings were not expected to be that great for the past quarter. And I think, most estimates, they are indicating that maybe, in fact, it's a little bit better than those weak estimates. However, FY26 is going to be the big year because we need to get back to that mid-teen double-digit growth. What are the odds? How do you read last quarter's earnings and your expectations for this year?
Good morning, Nigel. Actually, you see from the first quarter end of last year, so from Q1 FY25 end, we've been seeing downgrades in numbers and people have been reducing their estimate because outlook was a bit slow. You saw the pickup in GDP also coming in the second half. In the first half, we had a slow growth almost throughout the economy. Now we are probably out of this worst phase where we were seeing some downgrades. Right now, also when we see the numbers on reduced expectation, I think now everything is even Steven in terms of beats and misses. You have to be selective in each sector to pick up the right companies. But it looks like that the downgrades, that cycle that we were in, seems to be now at a pause. From here on, if I listen to all the conference calls in various sectors, one noticeable thing is every major sector leader, every large cap company in the sector is looking for a better FY26 than FY25. And except maybe some sectors which are internationally exposed and they see uncertainty, like for example, the IT sector, most other sectors, if you see the commentary of market leaders in those segments, they are guiding for a better FY26 than FY25. We have to choose on valuations where large caps right now look very attractive. Mid caps, small caps, in pockets, they've become attractive after the correction.
Okay, fair enough. Nimesh, you did mention CDMO players in the pharmaceutical space that you would be looking out for. We have this entire semaglutide opportunity which is going to emerge in next year, and that could be probably a big positive for a lot of pharma companies and ancillary companies within that space. Is that an opportunity that you've looked at, and how would you play it?
Absolutely. So if I look at the numbers that are projected till 2030 and 35 of GLP-1 molecules, and obviously their derivatives and other modes of delivery, I think there is a huge opportunity there, and Indian companies have the expertise to take benefit of this, whether it is supplying on the CDMO side or competing on the generic side. So I think there's a big opportunity for pharmaceuticals in India. We obviously have to go company by company in terms of what major impact they will make on the revenue of that company. But I think this is a very long story to go. I mean, next 5-7 years. See, some of these CDMO stories and GLP-1 stories, investors have to look at the mega trends and be a little patient with them. They will go through their cycles of expectations being a little volatile because people are still grappling with what exact numbers will be there. But these are definitely big opportunities for Indian pharma.
Right, and just a final question, a little more specific on the consumption space. You said you like everything from groceries to real estate. That's a wide variety. Anything that you like more than the other? And if I had to play consumption, do I play it via FMCG or do I play it via quick commerce?
I think quick commerce, discretionary, these will give you faster growth for sure. And you will see even FMCG doing better. So from what I see, that the majority of the results are out, and the outlook given by most of the FMCG companies is they are looking for, say, many of them are looking for a double-digit kind of growth and some expansion in margins also, except for some which are investing in the businesses and they may see margin pressure there. FMCG-like companies, they get their major re-rating when people are confident about steady long-term growth because their cash flows are very good. These are very good brand businesses, good cash flows. Once people get convinced, okay, I'm not seeing any market share loss or I'm seeing better times for the next few years, then those guys get rated upwards. So it will move selectively. I think from January onward, we've seen some selective re-rating upwards in them. They will give you steady growth. The delta may come in Alcobev in terms of discretionary spending in consumer and real estate is what we are quite bullish on.
Take that point, Nimesh. Thank you so much for joining in and giving us your perspective on the markets and the way you feel about the markets. A little more optimistic than what the screen has on board for you right now. Though